Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 10th of December 2015. Before I get into today's analysis, let's take a quick look at yesterday's trade recommendations. Let's start off by looking at the Canadian dollar on a 4-hour chart. My previous analysis on this pair still stands, but it's still a little bit expensive for me to get involved, so I'm looking for further pullback in this pair. It would be nice if we could get to the 13436 level, which coincides perfectly with this prior level of resistance and the 61.8% fib level. So the trick is just to remain patient, but I still like this pair to the upside. Next up, the Aussie dollar, again on a 4-hour chart. My position from yesterday has somewhat adjusted overnight based on the fact that Australia had better than expected jobs numbers. In fact, it was a really good print, massively beating expectations. And while there is some doubt over the accuracy of these figures, that sentiment will be pretty strong and still very much there. As a consequence of that, price breezed straight through the level of interest that I was looking to sell off around about the 72.80 level. It's now opened and closed above that level, so my analysis has changed. Don't get me wrong, I still think this is a great sell, but I prefer it now up at the highs, in and around the 73.50 to 80 level. In that location, we have a really nice trap known as the rat trap, and at that price, it would represent a good deal. So exercise a little patience and allow price to come to you, but I still like this pair to the downside. Next, let's take a look at the pound yen. This is a trade I took yesterday and I'm still in this position now. As you can see, it's slightly under my entry, but I'm not worried. It did take a dive towards the lows overnight, but that level held. However, it did collect more stop loss orders and has since failed to follow through. So I still feel confident that I have the psychological edge in this situation, so I'm good to hold with my original analysis. Also, later today is the Bank of England's interest rate decision. I've been having a read around this morning on the news wires, and there are some opinions out there that believe the central bank may be hawkish in their tone regarding the timing of the UK's interest rate rise, due to better than expected GDP figures. And because of this might have just dragged that interest rate decision a little closer into the future than had otherwise been expected. It's never advisable to preempt central bank decision makers. So long as you manage risk correctly and your analysis still holds up, you've got nothing to fear. Okay, so on to today's analysis. This is a 4-hour chart of the euro pound. As always, start your analysis by zooming out so that you get a good view of different structures and areas on the chart where you might be able to see some trap traders. By doing so, you often gain some more insights that will add weight to your trading decisions. Always drag those levels left so that you can see whether or not that area had some historical significance, meaning support being resistance and resistance turned into support. On this chart, you can see that we broke down below the 72.50 level, retested it, and then sold off strongly from that point. However, recent positive sentiment out of the ECB had seen the euro strengthen against many other currencies. And while this was very strong sentiment, the European Central Bank did cut interest rates. So I believe this area on the chart represents good value for a sell. Also, notice the state of the market. This is a great tip because many traders fail to understand the environment in which they are trading, and as a consequence of that, the environment can render their strategy useless before they ever take the trade. Meaning, if you're trading in a sideways volatile market, trend trading strategies won't do so well in that environment, and vice versa. This market state is in a downtrend, but it's sideways and volatile at the moment, which means my bias is to the downside. Fundamentally, that makes sense. But the moves are very vertical and large in nature, with very few pullbacks, and no sooner does price put in a new high, it tends to put in a new low very soon after. Here are some examples of that on the chart. So if my understanding of market state is correct, then it's unlikely this move to the upside will continue. Of course, anything is possible, but I'm applying as many different forms of analysis as I can to increase the chances of having a profitable outcome. And understanding market state is very much one of those areas of analysis I strongly encourage you to use. So let's zoom in and take a closer look. The first thing to notice is that price seemed pretty comfortable in and around the 70.29 level. The next thing to notice is this vacuum. There's no levels of support and resistance there to stop this price drifting across the void. And the trap we're going to be talking about today is known as a rat trap, and it occurred in and around these highs. I was a little late on my entry today, but it's my birthday, so you can forgive me for that. But I'm pretty comfortable with the risk and I like this trade. Don't worry if you miss the entry, prices will likely pull back and give you a second bite of the cherry. Because of this stop hunt that occurred in this area here, I'm fairly confident that I have the advantage in this situation. So psychologically, I'm very comfortable in this trade. It's just a coin flip, so regardless of the outcome, move on to the next independent event. Then rinse and repeat. If you would like to join me in my trade room today and get analysis on all the pairs I'm trading and all the trades I'm considering, I would love to see you there. Please click the button below to join me for today's live trade room. Have a great day and I hope to see you there.